Okay, I think we're underway there. So let me just say greetings, market rebels. Welcome to this week's macro measure combined with sector situation. These have been combined for some time due to various factors. One being trying to condense things a little bit and just touching on things, and the other being that just life stuff that's just been wow, really something over the past year and will probably be that way for at least another year, I would think. So going to stick with the program. This should probably go out tomorrow, February 1st, even though it's technically still January 31st. It's just in front of 3:30 p.m. here in the East Coast. I'm Wayne. We're going to get into it. Had a little time to do some prep this week, so hopefully we'll take things up at least one notch. Here's our trusty disclaimer. Here is our trusty Market Rebellion intellectual property rights notice. And then finally, we can get into just a very quick review of last week's. And I think I was so delirious and tired that I actually spelled delirium wrong. So I fixed that. So that's the good news about this week's review. The delirium spelling is corrected. Otherwise, this is pretty much was last week's slide, just very quick and dirty, which I was joking around about. It just the frustration just really got to me. I'm still kind of fighting with things, but at least I've been able to work on my main machine this week, which is a massive uptick versus dealing with the other stuff I was dealing with. And so I'm definitely have more energy, and I definitely have more energy in better spirits. But I've got to put this thing fully behind me. I think it comes back just to some kind of an unstable Windows install that's causing the problem. So I have to keep working with Microsoft. Anyway, I just highlighted in red. We maybe got lucky with the message last week, which was don't allow them to lull you into a false sense of security. Hopefully, what we did see would lead to a strong leg up. We thought we may get a little back and fill due to verticalness. So the back and fill came right away, as all of you know. They lowered the boom with that DeepSeek news. So we started out rough, and then they put the squeeze on, which we'll talk about in our notes. So the strong leg up definitely extended as well this week, but it's not ending on a good note. It doesn't seem, at least. And I think we have to consider this week tricky. So we're going with tricky volatility. And okay, so let's pick this up again since messages aren't being read and get calls right at the start of this video. I'm sorry about that, but that's the way it is sometimes with a large family. Anyway, getting back to where we were, yeah, I think it's going to be tricky. And I think that this is an interesting mix right now, to say the least. They did set another early week trap. They've been doing that quite a bit, and then really kind of goosing, ramping, squeezing for the balance of the week most of the time. Things are not finishing well. It doesn't seem, though, this week. There have been sharp rallies that have followed these things that usually, I should say, these early week issues that have cropped up and sell-offs that are commensurate with those. But that happened, but it doesn't seem like the close is going to really be a strong one. That has to be concerning because they've been able to close strongly in most cases, and this time they do not appear to be able to pull it off. So the verticalness lull reminder that we had from last week, that was really just a lucky development, if you even want to call it that. I don't really look at it that way, but if you're someone that likes to keep score on, oh, what did this guy say that this week? I mean, guessing the next day and what news is going to drop is pretty hard to do. You really, I don't know how you really do that. I'm sure some people can, but it seems pretty hard for most of us. But yeah, the DeepSeek, which was apparently not even new, according to a lot of folks, including our own folks at Market Rebellion. And I did see a story on that online somewhere that wasn't new. That's the whole thing. And I like to hit on this stuff for folks that are newer because I struggled with it so much. There would be many times where I would know of risks that were out there and the market would ignore them. And then suddenly they would introduce this risk that's been known, it's been known by many, or at least regular folks like me, maybe Ryan or whatnot, they would ignore it, and then suddenly it becomes front page news. And so this really plays into what we talk about a lot, which is the gang basically whipping stocks around, using the news to cover their tracks. And we even alluded to that, I think, in last week's video, where we said, you've got to be careful. Some of the ideas I put in early this week, I said, you got to be careful. They could start to use the FOMC and EPS releases to their advantage in terms of moving stocks. And I'm not taking a victory lap. It's nothing, there's no brilliant insight there. I'm just saying this is what we always have to keep an eye on, because even if it doesn't make sense, something I tried to emphasize, and you disagree with the assessment, they're going to get away with it. I get away with it all the time. They've gotten away with it since time immemorial, it seems, but certainly in my career, they've gotten away with it. And so you really can't fight against that. You kind of need to go back to the action. So I think they really did. They catalysted into this squeeze mode. And remember, think about all those bogus statistics that we've seen the government report, and more it became obvious, and things were revealed, and no one cares. All they really cared about was that there was this, quote unquote beat, or right, it was knocked it out of the park kind of thing at the time. So going back to where I learned of it, the man who shot Liberty Valance, I think it's something along the lines of when the legend becomes the story, print the legend, something along those lines. But that's really it. Just run with whatever the story is, and it doesn't really matter if it's well founded. It doesn't even matter if it's 180 degrees the other way. In the end, for the historical record, the market doesn't really care. It's all about what they're doing in real time, or this current times. Anyway, we thought they would try to extend things, and that they'd use EPS, and they'd start to get this next leg going potentially. But this is why I've got this repeated about the lull. It's hopefully it will lead to a strong leg up, but I think we have to call that into question. We are now at, I think, at a very interesting juncture. I wouldn't dismiss this cavalierly, despite the long-term trend still being up. And really, in the end, if you ever force me to, in a tough call situation like we have this week, if you ever force me to make the call, right, you got to make the call, right? Your life depends on it. If I'm really close, I just say, in the end, I'm just going to stick with the trends, right? That's just what I do. In most cases, not all, but that if you really were asking me, well, what do you got? You got to come up with something. I'd say, well, then just go with the trend, because in the end, that's, to me, is still the overwhelming factor. But there are times where there's certain signs that show up that I think you have to be a little more prudent than just going, even when forced to make a call, that you just say, well, let's go with the trend. And this could be one of them. So I don't want to overstate that, but that's my take. The major index ETFs largely recovered, but there are negative divergences in place. And that's one reason why I'm cautious. Breadth, to me, also kind of took a little bit of a concerning turn. It's not destroyed, but it's not so wonderful at the same time. CNN, AAII survey, they're kind of neutralish. I'll show those quickly. But I would say, look, many sectors earlier today look poised to join, but the tariff news wrecked, in the modern spelling, wrecked the session, to this point. I don't know where things are at the moment, but since we've got PowerPoint slides up here, but bottom line is, it's kind of took the steam out of what was looking like a really strong close for the weekly candle. And that's not as impressive, in other words, put it that way. Just want to mention, the UOA has been on fire, absolutely on fire. Nearly had, in UOA Pro, which I spend most of my time in, I think we had almost 40 ideas that were new, not let alone the number of updates that we also put out. But it was a very active week. There have been a few more massive VIX hits where they've rolled out a little bit in time, but they're still in there. There's still plenty of EPS season. We have a new month coming up, right? That can also kind of help extinguish short-term fires. Gold and Bitcoin are at or near all-time highs. Silver, of course, is still lagging, but again, just want to remind everybody about the massive chart potential there, really, and in gold. I would say that right now, right, the yields and the dollar have both dropped, and as we often say, they're usually, right, there's usually an inverse relationship with what they're doing to what's happening in the market. And that's good that they've backed off the past several weeks, but you got to keep an eye on them because I don't think that they're totally done at this point, technically. So the uptrends are still in place. They remain uncracked in there. So could they crack? Of course, but are they close to levels where they could crack? I do think they are, but they just haven't cracked yet. So they're kind of hanging out, correcting, and we'll see. I think you have to keep your eye on them. I think the big takeaway really is, despite the dismissal by a lot of folks, SMH and NVIDIA, I still think you have to be technically concerned about those. And I think they're a big linchpin for this market because you have the problem you have is that this story about AI and everything else and all these semis, this was a story that took a while to build. So many people bought into this story and they bought in a big way. And that means that you have a lot of people that are potentially, right, ill positioned. And people will say, well, I don't care because in the long run, it's still going to work out the way I see it. However, right, sentiment has a funny way of changing in a big way when things start to sell off aggressively. And so all those folks that are diamond hands or whatever they used to say about crypto or whatever, that are thinking that way about semis, not saying they're wrong. Certainly my fundamental take, there's no time for that in my life. So I have no idea really to on my own. I really have to rely on analysts to help me come up with my own take on things, especially as related to semis. But having said that, I do know that when there's too many people on one side of the boat in the market, it can really get ugly, or it can, in either direction, frankly. So I would be low key serious at this point. I think that's the whole thing. Like, I feel like there's still been a little bit of sort of a casual dismissal of concerns and people doing more of the same old, and just shrugging things off. I would say I wouldn't do that. I'm not predicting. I don't predict crashes. I don't predict big. This thing's about to get annihilated. I just try. I like to talk about conditions, and I like to talk about things that I've learned and things that have helped me, and sort of point out some little sort of factors and things that we might keep an eye on, and also try to put together a news neutral assumption, most likely scenario, or most odds on scenario. And that's very tough right now. And many of the longtime folks that have been with us for many years will know that usually when we have a hard time making a call, that's usually means that it's probably a tough market, and you could go either way, and you're better off not forcing anything. Many times over the past several years of doing the videos, and even before that, just talking in webinars, we did not have a strong lean or even come in with a bias, right? Thinking this is what's most likely to happen. And that's borne out, I'd say, quite a good percent of the time. I mean, I would call it a very high percent. I couldn't tell you what it is, but I feel like in my recollection, it's pretty high. And so that just tells me that when you weigh everything, if you develop a weighing system and that works for you, that you can arrive at that. So just wanted to sort of note that. I would have the DEF CON elevated. You put it wherever you think is right, but I would definitely be at least at DEF CON 3, probably realistically 2. You haven't cracked anything big, but this is a little concerning to say the least. So let me show you a few things and we'll get right into it. Let me just briefly stop the share. Going to move this stuff out of the way for us so we can take a look at charts and get out of here. And then that's going to be gone. Okay, so let's bring back our charts on my main screen. So share should be screen 4. So let's take a look. I'll go in reverse order sort of here. I'm seeing some hesitation. Let's hope this works. Yeah, so the first thing, I hope you all can see this. I'm jumping from let's see what's showing here. I want to make sure this is showing the right thing. No, it's not showing the right thing still. Yeah, I think we had a little break there because Zoom got up to its tricks, or Windows got up to its tricks with Zoom. I really can't say. Uh, Boy, it's frustrating. So I apologize for that. But boy, it just gets under my skin. Anyway, here's the neutral fear and greed. I alluded to this on the slide. Here's your AAII. Uh, right now, you are probably a little bit above norms in terms of there's a few more bulls than historically is the case. There's less folks that are neutral, significantly, I would say, and a few more folks that are bearish. So you're getting to the point where someone's it's kind of like bets are on and folks are positioned to one way or the other, and it looks like something could break. You did back off nicely from a higher bullish reading, which I think is good. You can see when things get really low, right? This is the contrarian aspect of it. When things get really low, you know, the what happened following that week, and so that's what we can go back to here, right? This is one of your lowest bullish readings in a very long time that you go back to, and what happens there, right? When few people are bullish, so many folks are bearish. There's probably your highest bearish reading, and that's mid-Jan, and that's when they started to turn things around. You know, so it's very interesting, very contrarian, but this is neutral. This backed off right now, so yeah, I don't think there's a lot to gain there, and it kind of support when we've done this in the past. That's kind of supported our news neutral, tough call, not sure about what's going to happen, just wait and see and trade the market in front of you, right? Just wanted to mention, because I did have it on the slides, the VIX hits, they really did pick up this week. I put a couple of updates out here. You can see that somebody did this vertical. So it's a March 30-60 vertical, massive trade, another massive 30-60. So they're looking like they're at, you know, nearly what 280 something thousand verticals in March in the 30-60. So there's been other things that have hit clearly, right? But I'm just letting you all know it's a pretty big trade. And we don't get this all the time. It's really been picking up. Some of these things have been really picking up lately there. Wanted to show the meta. I talked about this in cocktail hour. We had meta and last week, and I used a starter kit for it as the idea. Well, actually, it was about 2 weeks ago, but I meant when I said last week, I actually meant the strategy was designed with a starter kit vertical. And so we went with the 620, 640. The stock trigger was 618. And so the reason I'm bringing this idea up is because I talked about a little bit on Cocktail, and this is where I think it really brings together what we try to do at Market Rebellion in terms of, right, trying to provide ideas, but to folks that have hopefully learned a lot. And this is one thing that I call the snake in the grass vertical, or snake in the grass spread. And it's really could be put or call. But the reason I call it that is if you're wondering, is it the construction any different than just a regular call or put vertical? No, it's just a regular call or put vertical, but it's a vertical that at the inception of the trade, you're already planning to morph that vertical. And that can be done by uncapping it by taking off your short upside call. It can be done by closing the whole thing. This is your plan. When you get to your short strike, that's when you plan to then roll out of this whole package into maybe an out of the money call and put your winnings to that point in, and then really go for the gusto. And I think just the way that this stock has been trading, the kind of repeat options, let's see if it lets me get there. The repeat options activity, well, I'll show you that. Well, I can do it this way too. This is what Pete talks about a lot, where you get these guys and people just sort of pile in. Now we've definitely had more active hits, right, in other stocks that are not meta, where, you know, we've had 4 or 5 hits in the same stock or ETF in the same day. But the point I'm trying to make is that these guys just kept coming back for more. They kept coming back for more hits. in this thing. And these are, I think my recollection is they're all call side hits. And the stock, I don't know where it went to. I'm not sure how high it traded. I think it might have traded. Uh, what did it trade yesterday? Let's see real quickly. It looks like I'm off screen right now. 710. Yeah. So, I mean, this thing almost went $100 beyond it went almost $100 beyond the level at which the UOA traded, right? It looks like the UOA traded at 615. So yeah, you're about $95, about $95 move in 2 weeks in Meta. And this is where it all comes together between the technology, our UOA analytical team, what we try to do at UOA Pro, your education, and the market learning to stick with things when the markets are rocking and rolling and the stock is behaving well, and that's where the rolling comes in that you can learn about things like that. And of course, the catalyst, right? This was what I was expecting potentially would be that there would be an EPS run window, right? So that's really what they did. Just this is what they do quite often. It doesn't always we don't always get great charts to work with, which we had in this case, and we don't always get great UOA. I think which we had repeat UOA, but this is also worth noting for folks that wonder, well, why would you go with a 2,500 lot? Look what they did. They bought these. They bought a 2,500 lot. That's not a big trade in the modern market, and they bought an upside call vertical, right? So a lot of folks are going to be like, that's not even that impressive. But to me, it doesn't really. I don't. If you look at some of the other hits that follow this, they were outer months. Some of them were even leaps. And what I'm getting at is that um, you can't. I don't think it's the right way to go. You got to do it your own way. But I don't think you should pigeonhole it and say, well, true UOA is only going to work in the focus on the front week or two, and they're going to this was a month out plus when this hit. And they're going to buy only just long calls. They're going to be slightly out of the money so they can maximize. It's not that easy. Some deal stocks, news announcements, things, takeovers, those kinds of things. Sure, you get that kind of thing, but there's still a lot of people positioning in different ways they're comfortable with, maybe ways that their firm likes to operate, and they do what they do. And I just wouldn't ignore it, right? Because if it all comes together like a trade like this, where a lot of important things come together, including an oversold market that's looking to improve the whole works. This is really what I was getting at by reviewing this. So I just wanted everyone to know about that, because I did talk about it a little bit in cocktail hour here this afternoon. And in terms of activity, I just want to show everyone this UOA Pro service is designed to produce between 10 and 20 new ideas per week. And I just want to scroll down. You can just see that this week alone, this doesn't include the updates, it's just new, but this week alone, we had nearly 40 new trades. Not quite 40. I think it's somewhere between 35 and 40. That's how active it became this week. And I probably could have squeezed more in, but I didn't want to put too many in front of the Fed because I don't like to see people get off sides at the last minute. A lot of people that are new tend to want to trade the Fed day. And I think you're better off when you're new, even a lot of experienced folks just sidestepping that. So those are kind of the quick reviews on things. Hope that folks didn't mind that. Let me try to get us into some charts though. And I'm going to skip around on this, but what I really want to show everyone as we kind of are about less than 10 minutes before the close here. Oops, it's supposed to be SMH. What I'm trying to get at here is here's SMH. We've been talking about this. We've been talking about NVIDIA. I mean, it's kind of hard, I think, not to talk about these things. And we were waiting, saying, when is this thing? It was a leader and such a strong leader for so long. When is this thing going to join the party in terms of this symmetrical triangle, the incoming uptrend? When's it going to break? We would favor a breakout, given what the market's done, given the incoming uptrend, given the place that semis occupy in the current market. And you can see, right, this has been incredible in terms of the number of false breaks. I think we even may have mentioned that last week. But what I'm really getting at now is that you can see, like, I'll extend this line here out. We've had this as a support line. I'll just extend it out and kind of fix it a little bit. And there you go. And you're right below there, which is right below the 50 SMA in gold. You're kind of right sitting on your 200. But if you want to look at this as the start of a leg down, this is your corrective action. You hit the short, you hit the short SMAs, the 10, the 15, and the 20 up there, 20 being the light blue. And now you fall all the way back down. So this is really a poor close for the SMH. It's back below a support line, which now could be a resistance line, and it's not acting well. Right. And of course, the biggest dog of them all inside of SMH is naturally NVIDIA. And here's NVIDIA, and similar but different, slightly different. And this just looks concerning. Now, you could say, well, why are you not ready to buy here? It's the old, they chase folks out of it. And it could be, right? But I think this is where your thinking has to really evolve, and you have to be ready for that as a possible scenario. They're going to really scare the daylights out of people here, reverse this thing, and it's going to be up and away. It could happen that way, right? I just don't know enough about the fundamental situation to say that's probably going to happen. What I do know from doing this stuff for so long is that these charts look very challenged to me at the moment. This stock is not behaving very well. And if you want to say that the market is a weighing mechanism, even though that DeepSeek news is apparently old hat, it's not even real fresh news the way that a lot of outlets seem to promulgate it as, it's still not acting well. So at the end of the week, this is a pretty poor result. If the stories are bogus, it doesn't seem like the market has called the bluff of the story enough directly in NVIDIA or SMH to me. So if you're someone that believes in the market, and I always kind of default to that the market in most cases knows a lot more than I do, and it will know it a lot sooner than I will, which really brings about, well, then that's why you go with the price action. You trade the market that's in front of you. If you're in the rebel pit, you hear that probably every day, multiple times. But it's not like I'm not saying it. I don't really say much in the webinars. Greg and Ryan do all the talking, but my sentiment is 100% in agreement with them. You've got to trade the market and the stock in front of you, that price action as a short-term trader. And right now, I don't know how you can look at this weekly chart here in NVIDIA and say I'm not really concerned. I mean, this is the first visit this thing's had to near the 50-week moving average in gold there, SMA, in a few years, right? You've got to go back quite a few moons to get close to the 50. That's how much of a juggernaut this thing has been. So that's no small thing. It could still survive, right? I'm not writing its obituary here. I'm just discussing that this is not acting well. We waited, like probably everyone else, thinking, when's this thing going to start behaving better? And it just hasn't. The reality is it just hasn't, right? And so this story, if you look at this as the discounting weighing, mechanism the market's supposed to be, this thing's having a pretty rough week, right? If you look at it, we're looking like we're going to be down. Where did we close last week? We closed at 142. You're going to be down about 22 points. So that's a horrendous week on the close. The low was about a 25, 27 point drop. So you're looking at really, right, something really strong. I mean, you're looking at something on the order of nearly 20%, if I'm not mistaken. Certainly, right from there, it's 20% from the recent highs in earlier this year on the weekly. So this is really a real pullback, to say the least. If you're from my school, right, you don't like the falling knife. I don't like just buying on retracements. That's why I don't have anything on here. I like to see the momentum begin to shift to make me feel as if, okay, the selling may be done, and that maybe now I've got this low plus a certain amount to trade against. So I don't like just jumping in willy-nilly on knife catches, but all I'm getting at is you've got to be concerned about this. It's maybe the biggest story out there has been, and you could get more retracement after the incredible move that it's made. So if you come back on the monthly chart, let's see where we think there'd be some support. And I would say, like, probably it's a tough one. It's nothing really clean there, but somewhere near maybe 112 would I'd put a ballpark in on, right? That thing could trade down a little bit further. So we'll see, but that's not a really pretty monthly candle. It's not a pretty weekly candle. It's not a pretty daily candle, right? So this is really taking a turn. It's clearly at risk, I think, right? If this was the start, you have a leg lower, and then this is sort of like your correction of that leg lower, right? Or you could call it your consolidation, your churning, whatever you want to call it. But if you want to call it that, you still haven't lifted up enough and gotten away from this danger zone. You still haven't worked your way back towards filling the gap that was left on Monday with that news. Breaking, I guess, would be a way to put it. So you've got to be, I think you got to be really careful with this epicenter stock and that epicenter ETF not working well at the moment and being at risk at the moment. So things need to shift quickly here, or this could start dragging more and more down with it. That's my simple way of looking at it. And that's why the notes are the notes. That's why I've got this on here, which is, I think it's low key serious, right? I've kind of heard a lot of dismissal happen this week. I think it's a very tough call because I don't know if this is going to hold out, worsen, reverse. I don't know what's going to happen with those two with a high degree of confidence. So I think, that's a big thing. I think given that how many folks are long all these things still, I think you've got to be prepared for significant problems and hope that your concerns are unfounded, because we don't really want that. I'm not saying you can't do very well should we have that. I mean, you certainly can. It's just that for everyone's portfolio, it's never fun to really have to take that ride back down. So not good that we are breaking down below, right, the SMH triangle to the downside now. And it's happening on heavy volume, as you can see. Although the volume is declining, maybe the sellers are becoming closer to being exhausted if we want to pull a silver lining out of this. But you can see even today's volume is probably fairly heavy compared to most times. So you probably need to be near earnings to really get that. And we're not near earnings. You're still right nearly a month away. So definitely concerning. You can see that. Let's see if we can bring this up because it'll segue us decently where here's your top, a similar top, and you've got some readings down here on these indicators that are similar or worsening, right? And I think that's what I'm seeing. To jump over to the SPY to start out with, this is our main proxy. And if we look at SPY, I'm just going to reduce this. But if we look at SPY, you've got this top back in here, and you've got pretty high readings on your indicators there. This time around, you're kind of losing, right? You're losing against these former highs in here on your oscillators indicators, which are just a simple grouping that I keep so we can make sense out of things. But I wouldn't call this a disaster at the moment, right? It's just it's not the close that I had in mind. I was hoping there'd be a stronger close than that for the end of the week to really kind of give this this potential leg we saw maybe happening into EPS, get that pull back from the verticalness. It happened again in a way that I wasn't anticipating. I thought maybe they would just eventually in the early part of the week kind of work it down Monday and Tuesday on just regular run-of-the-mill news, find support. 50 made sense, maybe a little bit higher than that, and then go from there, that type of thing. A lot of that sort of happened, but it happened in a way that we couldn't really do much about. That's just the nature of it sometimes. But it was on that deep seek, not new news. But yeah, today's kind of failure to close up there, not good. You could see things are tailing off. You're not at DEFCON 1 because you could look at your long-term trends. Look at your 50 still upsloping. The 20 in light blue is upsloping. There should be some SMA support near these other lows, near where there's a flat line. That's going to be at about 595 on your SPY, so down 1%. Even if it does fall, it's got a support line in there. I just highlighted in blue. There's a lot of support in theory waiting for it, not too far below. But remember, lower high, worsening indicator oscillator readings on your daily chart. So that's not looking good. I still think, right, as of right now, the uptrends are still intact and there's not really anything to go into absolute panic mode over. It's just that what could be brought about, I think, by that semi complex, especially NVIDIA. Here's your cues, and the cues, right? Similar story, very similar story, but this just doesn't look as good yet as we did back in here, right? And you can see that this is a little bit of a problem. Another thing I want to bring in at this point to just kind of make that point before we go through the charts a little bit more is that breadth, right? It did bounce back, and we were saying we'd like to see it bounce back a little bit more. But late in this week, you can see that we kind of rolled over the last couple of days, and things really haven't been that great here to finish the week. So instead of sort of building as the week, like a scenario like this, right? Maybe not that strong, but you get the idea. Sort of building into week's end strongly, like, oh, this is a convincing win. Kind of went out with a little bit worse than a whimper, I'd say, right? You just had this little bit of a rollover. You could see the McClellan oscillator definitely with that negative kind of negative complexion and bearish complexion at risk of really taking this little low out that formed earlier this week and coming back in. That's, again, not the end of the world. New highs, new lows, not the end of the world. But certainly this whole thing hasn't been as forceful as other phases or periods yet, right? So not really, I think, what you wanted to see. I think given how close you were to the all-time highs, given how you were able to avoid really falling apart on the semis news because they put the old trap together earlier in the week and then squeezed pretty much from there with those catalysts, as we talked about. I think that was that was a nice move, a great deft handling, but didn't really finish strongly. So I would say the commitment from the gang isn't as strong as I think a bull would like to have seen it, or at least I would have liked to have seen it. So you're still, I think right now you're still in a tricky time where everything's fine as long as you stay above your 20 and 50 in the Qs. And as far as getting excited about it, given how many times recently it has had struggled at today's high, which is not too far from a close, and not too far from a close, not too far from an open and a high, you can see that right in here, it's very clear that this 533-ish, let's call it 532, 533, 2% up, got to get through there and really start feeling better about it. Because until it gets through there, this is an issue now. I think there's clearly some resistance right near the 532, 533 area. So you're not back above this line here in blue that I highlighted. Your trends are still up. You really can't say anything bad, but you're not really looking that impressive at the moment over here, and you have this potential low or high end. So once again, I would say you don't want to get ahead of yourself and start, tuning your violin and getting ready with some kind of a dirge or something like that. It's not like you're going to be doing this funeral procession, but it's a little concerning, low-key concerning to me. Let's look at this high versus these highs, right? And so if you really want to nitpick it, you could say, well, yeah, this is not looking as good, but the reality is it's just not looking as good. At this point, it could still improve, but could this be a problem zone? Is your momentum sort of tailing off here? Yeah, you kind of went sideways after the rescue. After Monday's rescue, right? You went sideways. You tried to rally, and then you kind of, at the end of the week, there wasn't enough conviction to really hold strong, despite all the other EPS that are on the way. You sold off. You did find support on the 10 SMA there in white, which is rising. That's good. That's really, textbook. It doesn't get worse than that. But again, we're talking about where you're going out. And to me, the way you're going out at the moment is a little bit concerning. In these charts, the three major index ETFs we've looked at so far, IWM, that's doing IWM things right now. right? So you've got to wait for the breakout above today's high, yet another failure. But you are beyond here, where I would call this the this corrective action, right? That's your corrective phase, and now you're trying to put together your resumption right into the rally mode, and you're being stymied. I think things here are not looking wonderful technically with the indicators we've got on here, just basic things we rely on week in, week out. So could you be having this sort of similar top worse readings type of scenario? Yeah, I think you can, right? That's where you're at. So they need to start defending this thing, I think, pretty quickly. Otherwise, they're going to risk dropping to the confluence of the 150 SMA and Rust and our former resistance lines, which we would think would act as support. Remember, I would always tell folks, if you're trading something like this, have your bid in front of both of these things by a little bit. You don't want too much company with everybody else that's waiting for them to get hit. You want to bid a little bit in front of those. And I usually expect, again, without news that's really material, I usually expect support to hold the first time it's tested, right? So that would be another reason to have a bid in there if you're trading something short, or you've got gamma that's creating it. I'm not sure what your situation would be, obviously, but you get the idea. But right, this has been a good trader. It probably still is, but it's right now you're a little bit twixt in between. I'm waiting. I'm just going to wait. Right, this is something where I think you can be patient on this thing and just wait for this thing to have an impressive close. You still have to do the old false breakout concern. Always have to do that, but at the same time, I'd rather see this thing develop either more action to get in from a lower level, and then start showing some kind of reversal, or just wait for this thing patiently to go, because it's been a false breakout machine over and over again, and a lot of people keep expecting it to join. We keep noting how much potential is there if it can join and get above 245, but for all the talk about it, wouldn't this be wonderful? It just, right, you're quite far away. You're still about 9% away, and with the way that things have acted in the other indices, right, the lag is it's pretty bad. I mean, it might not be the worst lag we've seen, but it's close to it, given that they're not far. The Qs and SPYs aren't far from their all-time highs. But remember, they've got catalysts. They've got a new month, new money supposedly coming in, and what they often do with that is kind of like quell things, right? Extinguish problems. So you ended up going out on an ugly note, I would say, but they certainly could. That could be like a Surf Pro, like nothing happened, right? We've seen that many times where you have an ugly sort of Friday action, and then the gang's like, what, who, what, what's the problem? I don't see any problem, because they just start, the shenanigans start right up again. And you could read about what's his name. I'm trying to think of Ken, because I can't think Ken. Whatever, it doesn't matter. But we came up with some good. There was some good material I saw